Welcome to the Rudick Report. Today is Friday, November 14th, 2025. As global financial systems face mounting pressure, Ripple and XRP are quietly reshaping the future of liquidity and settlement. Ripple has spent over a decade building the infrastructure necessary to support a global financial reset, with the XRP ledger at its core. Their strategy has been methodical. First, laying down scalable blockchain rails. Second, embedding themselves within traditional financial systems through trust building and partnerships. And third, preparing for mass adoption as tokenization becomes the norm. Ripple's recent messaging, especially at the Swell event, made it very clear. They're positioning themselves as the most trusted blockchain company in the financial sector. XRP is engineered to serve as a bridge asset for cross-border payments and institutional settlements. Its design allows for instant 24/7 settlement without reliance on corresponding banks or overnight lending markets. Each XRP is also divisible into 1 million units, enabling both microtransactions and large-scale institutional flows. In fact, the higher the price of XRP, the more efficient it becomes for liquidity provisioning, making it ideal for absorbing global capital flows. And Ripple's partnerships with major banks and platforms like Hidden Road and G-Treasury signal a growing injection of institutional capital into the XRP ecosystem. So as traditional finance faces mounting pressure from debt rollover, liquidity crunches, and repo market instability, Ripple offers a non-sovereign, programmable alternative. XRP's role becomes increasingly vital as fiat systems struggle to refinance obligations and maintain stability. Ripple's model doesn't rely on central bank intervention. It offers a parallel system that can operate independently of legacy constraints. So looking ahead, Ripple is positioning XRP to absorb value across multiple asset classes: commodities, fiat currencies, securities, and stablecoins, as these assets become tokenized. The long-term vision is for XRP to serve as the settlement layer for this emerging digital economy. Ripple's pursuit of a banking license and alignment with global regulatory frameworks further supports its ambition to become a central solution for banks, financial institutions, and potentially even central banks. Also, there's growing evidence that XRP is beginning to decouple from Bitcoin and other speculative crypto assets, much like gold has decoupled from interest rate cycles. This shift reflects XRP's evolving role as a utility-driven asset rather than a speculative one. As yield curves steepen and credit spreads widen, XRP's utility as a liquidity hedge becomes more apparent. In a world of fiat debasement and systemic risk, XRP is increasingly seen as a digital alternative to physical gold, a store of value for institutions and individuals alike. Ripple's ecosystem is built to thrive in high-leverage, low-trust environments, making XRP a core asset for the next financial paradigm. With all the value eventually moving on-chain, only a handful of blockchains will have the scalability, the trust, and the liquidity to handle trillions in transactions. And Ripple has positioned XRP to be one of them. Thank you for listening, and until next time, this is the Rudick Report.